The GPS DairyCAST features the high-value insights of the GPS Dairy Consulting team's trusted advisors and the owners and managers from the elite dairy farms they serve. These conversations deliver on the GPS Dairy Consulting promise to inspire change and grow leaders.
Hello and welcome to the GPS DairyCAST. I'm Peggy Coffeen from the Up-Level Dairy Podcast, serving as your host. And on this GPS DairyCAST, we are coming to you from the 2024 GPS Leaders Forum. And joining me today are GPS team member Paul Dyke, as well as one of today's featured guest speakers, Jacob Shapiro. And this is going to be an interesting conversation that's sure to enlighten you on the topic of geopolitics and the future of American agriculture. Get the insights to what's really going on in the world since our presidential elections, what could be up ahead, and how that will affect American farmers, specifically dairy farmers, right here today on the GPS DairyCAST.
Hey Jacob, it's great to have you here at the GPS Leaders Forum. We really appreciate you coming up to be with us and giving us a great presentation. Tell us a little bit about your background, how you got into this world of geopolitical prognostication.
Geopolitical prognostication. They told me not to go off the rails, but I'll
Yes,
tell you, the way that I got into it was ass backwards. I was not expecting it at all. So my undergraduate degree was in Middle Eastern Studies, but it was in medieval Islamic philosophy. So
I was really close to ag.
Yeah, really close. I thought I was going to be an academic. I thought I was going to be teaching in universities for the rest of my life. And I'll date myself. I graduated into the 2008 financial crisis, and I wanted some options. I didn't want to go straight into academia. So I got an internship at this weird company called Stratfor, which was a global intelligence company. And I happened to be an intern making coffee for the analysts at Stratfor right when the Arab Spring kicked off.
Oh, wow.
And if you can believe it, they didn't have any Arabic speakers. And so suddenly all of my Quranic 14th century translation, hey, coffee guy, can you also go tell us what's going on in the street in Cairo and Beirut and all these other places? And I never really looked back. I loved the work so much that I just stuck with it and went from being sort of a Middle East analyst to more of a global macro analyst. And in the last couple of years, one of my biggest clients was in finance, and I kept on getting pulled more and more into finance, and my analysis kept getting applied more and more to investments in finance in general. So I went from medieval Islamic scholar to multifamily office investment manager.
That's the advice I'll give to my kids as they get their degree in art is you never know where you could go. You could go into being an analyst, I suppose. A lot of stuff going on in the world in the last couple months. I think we're all interested to hear your view on what does this election with Trump mean for our agricultural world? What does that mean? What should we expect to see?
Yeah, I'm going to punt the question first and then come back to it, because I think when historians write the history of 2024, Donald Trump is not going to be the first thing that is top of the fold. And the big concept that I'm going to talk about today with the folks that are in the room is this idea of multipolarity, of a world where the United States is not the top dominant power in the world. It doesn't mean the United States is in decline. It just means that relative to China, to Europe, to Brazil, the United States' power is not as overwhelming as it used to be. So the United States cannot simply tell everyone what to do and have them fall in line. And my example of this is look at what shipping has done since last year's Hamas attack on Israel on October 7th. Basically, all shipping through the Suez Canal, whether it's ag commodities or energy or anything else, has ceased. And it ceased because a ragtag group of militants in Yemen have been firing off missiles at ships that are going around that part of the world. And the much vaunted United States Navy, for all of its power and all of its strength, has not been able to reopen those shipping lanes. The last time something like this happened was in the late 1980s. It took the United States all of 2 weeks to bomb the crap out of Iran and to reopen the shipping lanes. And that hasn't happened even yet. So we're going on more than 12 months where shipping lanes have been closed. So there's this broader shift towards where the United States thinks it can tell everyone what to do, and it can't really tell everyone what to do. And you're seeing that play out in real time, even if you're not seeing that play out in the rhetoric of both presidential candidates. As for President-elect Trump, another point that I'm going to stress to the audience is, look, one of the reasons that analysts like me don't like President-elect Trump has nothing to do with him personally or even his policy, is that he's totally unpredictable. He will wake up one morning and decide he wants to do something completely different than what he said last week. So all of my fancy analytical models and, I've got the macro trends here, it doesn't work because he's changed his mind on a dime. Which is to say, unless you have access to somebody who's in the room eating breakfast with him, you have no earthly clue what he's going to do in the next 2 years, 3 years, 4 years. And oftentimes, if you read some of the books of his former cabinet officials, the last person who had his ear might be the person who gets the policy push. Or his reflexive contrarianism might make him, he gets all of this advice and he'll just say, well, I'm going to do it different because I want to be different in that sort of way. So for farmers, what I would tell you to expect from the Trump administration, I would expect volatility. I wouldn't put anything in the bank there with what he's going to do policy-wise. He hasn't really told us what he's going to do yet, and I expect a lot of different zigs and zags as he tries to figure out how to implement what he's promised versus the economic and political realities that he has in front of him.
The dairy industry's had more volatility in the last few years, so don't expect anything different in the next couple of years.
Of course, and I think that goes without saying, but what I'm specifically saying is don't expect any explicit policy support from the Trump administration, and if you do get policy support, take it with a grain of salt. An example of what I'm talking about, let's go back to his first administration. We have some data that we can deal with. He promised that that phase one U.S.-China trade deal, it kind of got lost in history because COVID happened shortly after that agreement happened. But the idea was that the Chinese were going to buy lots of U.S. agricultural commodities as part of a reset in U.S.-China trade. They agreed to that, December 2019, right before the walls all came down with COVID. It was a nice deal. It sounded good on paper. Would have been great for the U.S. farmer and the U.S. dairy farmer if it had happened. But if you look at what China promised to do versus what it purchased, it came woefully short. So he gave you I'm going to do this, and I'm going to push this, and I'm going to use trade policy to open up markets for you. And in practice, none of it happened because there was no follow-through. That's what I say about expect volatility and also expect difficulty with implementing policy and expect changes in policy if things are not working the way that he wants them to.
China is an interesting country, of course, because we as folks that are in the ag world, we're never quite sure what to think. We hear, hey, they're going to buy a lot of commodities, and then they don't. We hear that the dairy industry is suffering, and the data coming from maybe the government isn't the same as what I hear on the ground. How do we wade through that? I mean, how do we wade through what's real and not real?
So, ignore the government data. The government data is not true, and trust what you see on the ground. I have a great slide in the deck that has all these different commodities and what China's been purchasing from the U.S. and if it's corn, soybeans, beef, all of it's down, but not milk and not dairy. Like dairy's actually been going up at a nice little up into not huge, but the slope is up and it's going up and to the right there in general. But I would say that that's fool's gold. If you are a U.S. ag exporter, if you can export to China, great. You should. I hope you get the best price you possibly can. You should consider all of that bonus because it's not sustainable in the long run. The United States and China are on a collision course when it comes to geopolitics and when it comes to policy. And you have already seen China trying to either become self-sufficient in the commodities that it imports from the United States or source them from other countries with which it does not have these big geopolitical and policy issues, whether that's Brazil or Argentina or starting farms in sub-Saharan Africa on land that they buy from locals there. So again, if you can export to China, great, but I wouldn't expect that to be a market that you can sustain. Instead, I think you should be spending your time developing relationships in countries that maybe have not been as easy as China in the last 30 years, but are going to be the biggest source of growth for these sorts of things. So if I'm talking to the dairy industry, Indonesia is number one. If you haven't been thinking about Indonesia, if you haven't been parsing Indonesian elections, if you haven't been understanding the impact of what their new president says is this free lunch program to provide milk to every mother and child in the country for the next 5 to 10 years, like maybe put down the Fox News or whatever else you're watching or MSNBC, whatever your political proclivity is, and open up an Indonesian newspaper and hit Google Translate and look at what shocking demand numbers you might be getting out of a country like that. That's how I would say treat China as bonus and start opening up, do the hard work of opening up new markets and thinking about countries that you can have stable relationships with.
So I was in Indonesia a couple months ago.
See?
I have a client in Indonesia. He's here at the conference. And it's a very interesting country in that I believe there's 6 dairies over 500 cows, and it's the 4th largest country in the world in terms of population. I believe it's, is it 350 million or
Closing in, yeah.
Yeah, closing in. And yes, there were elections in this last year. The president wants to bring in, I believe, 1.2 million cows into the country. And if you've visited there, Java, where Jakarta is, and you travel on their high-speed rail, and then you travel the countryside, you realize there's no land. Java is about the size of Wisconsin. It's maybe 5% larger, and it has, I believe, 140 to 160 million people on that one island. And so you say, well, they want to bring in 1.2 from a political standpoint, and yet there's no land. I mean, the dairy that I work with, yeah, we want to expand, but where are you going to grow your feed or crops? And so it is a very interesting country to visit in terms of the wealth that's there and the poverty. I mean, and the new president saying, hey, I want to bring in 1.2 million cows. And at first you go, wow, that sounds like, to some folks, that sounds like, wow, that's amazing. They have no idea on the logistics as to how you would actually move 1.2 million cows. The only place they can buy cows from is Australia. And Australia doesn't have 1.2 million cows just sitting on the doorstep somewhere saying, hey, we'll ship them next week. So probably, I think I agree with you that at some point exports have to come into play, and there's an opportunity for the U.S. I mean, just in terms of a wide open market.
Well, that's so much of our news coverage gets focused on what's happening in the White House, what's happening with U.S.-China relations. But there's a whole world out there outside of that. And there are so many opportunities that people are ignoring because they're not like you. They're not in the trenches and they're saying, what can I do in Indonesia? Another great example, which I will talk about today too, is Mexico. Mexico had in their national development plan from 2019 to 2023 to move towards self-sufficiency in milk production.
Yeah.
Nice goal in theory, but if you look at their imports from the United States of milk over that time period, up and to the right, because it's one thing to say we want to be self-sufficient, and it's another thing to say, okay, well, we don't know how to do that, and we actually need to make sure that the milk is here so that people have the milk that they're trying to pay for. So I think there are a lot of different markets and a lot of different opportunities that are created by some of these geopolitical dynamics that I'm talking about. I, for the most part, am not pessimistic. I think the biggest mistake you can make right now is to get into a fetal position and expect things to go back the way that they are, or to expect that the U.S. government is going to come in and pave the way for you. I think it's a time to innovate and a time to get boots on the ground and take risks because there are lots of opportunities out there.
GPS Dairy Consulting goes beyond nutrition by offering tools and resources, broad multidisciplined experience, and a collaborative philosophy across a range of consulting services that will make your business more successful. How will GPS consultants do that? By collaborating with you and your team to solve challenges and create successes while achieving sustainable and profitable results. By fostering personal growth and leadership development, and by inspiring continuous change and improvement in your people, systems, and results. GPS Dairy Consulting LLC will go beyond nutrition to help you achieve your most challenging goals. Learn more and connect with a GPS consultant at gpsdairy.com.
Where do you see, what are the markets? I mean, we Indonesia might be one, China may be still a market, maybe. Are there other parts of the world that we can see growing for our exports? I mean, exports, I think, are, if you look at the last 20 years in the dairy industry, we couldn't have survived without them. I mean, not survived, we would have survived, but they were really important for the bottom line. Are there other parts of the world that there will be opportunities?
Well, there's good news here because some of your chief competitors, say like New Zealand or some of these European states, are in much worse shape than the United States is. I know that the U.S. farmer and the U.S. dairy farmer is a little down right now. When I talk to them, and they seem a little glum. They're nothing compared to what New Zealand dairy farmers sound like and some European dairy farmers like. So any market where those guys are at and where they're pulling out or where production is going down is a place to look. But I think it's honestly a keep it simple sort of question. Latin America is nearby, and the United States is going to have close trade ties there, especially if this multipolar world that I'm talking about emerges. Southeast Asia, whether it's Indonesia, Malaysia, some of these other places, those are huge potential markets. I'll say the Middle East, and people will be like, what do you mean? The exploding Middle East? How am I supposed to get it there? Yeah, the rich Gulfy states absolutely are going to have demand for these types of products, and they will pay top dollar for the fanciest yachts and the fanciest cheese and the fanciest milk and everything else. Like, they want to buy it. And then the real wild card, I think, and which I don't know which direction it's going to go. I could make the case that it's going to become a competitor for the dairy industry, or I could make the case that it's going to be a shot in the arm for the dairy industry for the next 10 years, is India. Because India has huge ambition about what it wants to do, sort of like I was talking about with Mexico, but brass tacks, when it actually comes to following through on the ambition, it's falling a little bit short in the last couple of years. And India falling short, if you're falling short on a population of 1.3 billion people, there is a lot of opportunity, even if the overall trend is in one direction, for you to have things there. So I would be focusing very carefully on what's happening in India, how policy versus implementation is working, and then other markets that I'd be focusing on, Latin America, those rich regions in the Middle East and parts of Southeast Asia.
So why don't we talk more about Africa? I mean, Africa is a huge continent, and I think we just say Africa and we forget that Africa is unbelievably large geographically. Is there opportunity there, or is that still another decade away?
The investment guy is going to come out and me now. There's opportunity everywhere. It depends what your risk tolerance is. So there's absolutely opportunity in Africa, but you have to have a much higher risk tolerance to be there. And it's not going to be as easy to break into some of these markets and to maintain some of these relationships as it is in a place like Latin America or in a place like Southeast Asia. You're absolutely right. Africa is not one thing. So, I mean, we need to break it down into a couple constituent parts. Northern Africa is really part of the Middle East. Countries like Egypt or Algeria, those are actually markets that I think are very promising from a U.S. dairy export perspective. They have some of the same characteristics of the rich regions of the Middle East that I was talking about on the Gulf. Southern Africa is really dominated by South Africa, and there are some opportunities there, but I don't know, there's also an awful lot of competition there. And then if you look towards East Africa, which, think of Ethiopia as sort of centered around it and these countries around it, I mean, you've got piracy and you've got civil wars. Ethiopia had a civil war recently. Sudan is in the midst of what is probably the worst humanitarian crisis in the world today that doesn't get nearly enough coverage. You're having millions of people displaced and millions of people starving. There should be opportunity in there, but again, like your risk tolerance and the level of work you're going to have to do and what you're going to have to be ready for to be in those markets is pretty huge. So yes, there's opportunity in Africa. It's not for the faint of heart, and I think there are easier opportunities on the table before you start going down there. But if you have that risk tolerance, absolutely, there's more potential because that's where demographic growth in the world is happening. I talked about Latin America. They're not growing population-wise. I'm just saying they're getting richer and that there'll be more demand. Same thing for Southeast Asia. The demographics are not in your favor. Even India population growth is starting to grow down. It's not slowing down in Africa. So if you just want the demographic story and you think more humans means they're going to drink more milk, means I want to be in that market, Africa is where you want to be.
What about in terms of competition for production? We kind of know New Zealand's locked in land-wise. Europe's really there's only so much land there as well. Are there other countries that will rise that you see? I mean, with land, Brazil or others? I mean, where's going to be the next dairy power? I mean, U.S. obviously is that, but who else is going to come onto the global landscape, do you think?
Well, this is where I'm going to contradict myself because India is the country that we really have to watch there because if India gets its ducks in a row, it's going to be India. It's going to be India in a really meaningful way. And there is some historical precedence for this. In the 1960s, India was woefully dependent on the U.S. for most of its staple grains.
Yeah.
And then when Lyndon B. Johnson wanted to escalate the war in Vietnam, then India didn't want to support that rhetorically. Johnson went to the Indian leader and said, I'm not happy with this. I'm going to start yanking some of your food from the United States if you don't say what I want you to say about Vietnam. And that moment started a green revolution in India where the Indian government said, no, we're not going to be dealing with this in the future. And so they surged production of grains to levels that most of the experts at the time said was physically impossible.
Right.
So if you have that kind of protectionist move in India, and if they have a second green revolution and they add dairy to it, well, that's a country that we're going to have to think about really seriously. I also would not sleep on Europe. New Zealand, I think you're right, is sort of locked in. But Europe has been in this weird bubble where all of these challenges are facing them and they're not actually doing anything to attack them in any meaningful way. Probably that continues. But if you think about the war in Ukraine, you think about the difficulties of Europe's relationship with the United States in the context of a second Trump administration. If Europe could reform itself a little bit and say, hey, we want to protect our farmers more, and we want to be more competitive, and we want to be more self-sufficient, there are policy fixes that Europe could make things, to give incentives to European farmers for them to be more attractive, to boost production, and to think about exports again. They're nowhere close, but one of the most interesting things to watch with the Trump administration for me will be, are they really going to leave Ukraine out to dry? And if they do, is Europe going to step up and take its place? And if Europe starts doing that, does that then open the door to Europe saying, hey, we're now collectively defending Ukraine. Maybe we should collectively defend our farmers from U.S. competition, or maybe we should collectively defend our food system from folks that are trying to get into it. So those are two of the big ones that I would think about. Brazil is always lurking there in the back, but I think that's more operative for, say, corn and soybean and wheat farmers. So I think you have issues to think there in terms of inputs, but I don't see that Brazil, at least in the next 3 to 5 years, is going to be a big dairy competitor. I could be wrong there. They've made incredible progress in some of these other areas, but I think that's a little further down the road.
What I'm struck by is my work in Indonesia and watching that Asia market in the dairy industry is they don't have to go through 1970s technology or 1990s technology. They can just jump straight to 2024 and, hey, we're gonna copy that barn that I saw in Wisconsin. I'm gonna pull that parlor in from Europe, and we can be at the same level as U.S. dairies. They may not have all the human resources figured out. They may not have all the infrastructure figured out, but they're not far. I mean, they're not far from it. It doesn't take much. Some key consultants that go out there, or key people that they pull in from other parts of the country, they can jump fast. And I would think that would be true with India as well, that they don't have to go through that middling stage that we did through the last 40 years.
Well, and that's sort of a good place to go back to where we started, which is this concept of multipolarity. It may sound sort of abstract, but what it means and for the U.S. agricultural exporter is that you have to think that since World War I, so for over 100 years now, the entire U.S. agricultural complex has been about exporting surplus calories abroad to places that couldn't produce enough food for themselves. And all of these different countries that have had population explosions over the past 50 to 70 years, they had those population explosions because there were cheap American calories that they could import. Now those countries don't want to import those calories. They want to be self-sufficient. They want to push forward on their own front. And you're also getting competition where the United States is really not the low-cost producer for a lot of these different types of commodities. So in some ways, we're in a completely different world here where it's not about the United States farmer gets to export and there's going to be open markets and there'll be more open markets in the future and everybody's going to go to the WTO and globalization is great and we're all going to hold hands and sing Kumbaya. Like, that didn't happen. And so I think the United States farmer is going to have to think a little bit more seriously about maybe my first export market really should be the United States. And really what I need is better infrastructure to supply domestic markets. And maybe I need to be thinking more about vertical integration and getting better margins for the product that I'm selling here in the United States, and then thinking about, okay, what are my specific foreign markets that I'm strategically targeting rather than I'm just sending milk out into the ether and somebody is going to buy it. So yeah, and to your point about Indonesia and about technology and being able to jump like that, another great example of what I would talk about is, we already mentioned Ethiopia. Ethiopia, in the midst of its civil war, the government came out and said, we would like to be not just self-sufficient in wheat, we want to export wheat in 2 years' time. And I like literally, I was on the speaking circuit at that time, and I would use it as a joke. I would be like, LOL, like these guys they're going to export wheat. They have a civil war. There's no chance that they can do anything. And the government went out and bought the best seeds and bought the best fertilizer and sent people out to the farmers to teach them how to use some of these things and new technologies because they were farming like it was 1960. And within 2 years, they made me look like an idiot. They were exporting into the region, even amidst the civil war, even amidst all these problems. So you're exactly right that a lot of these countries are starting from really low base cases, and it doesn't take a whole lot to get them to a higher level. The last thing I would just underscore there is, and you sort of went past it, but human capital is so incredibly important. So yes, Indonesia can take the dairy off the wall and install it, but if they don't know how to use it, like probably they're not going to get the same sort of productivity as somebody else would, and the American farmer is going to continue to innovate. So that dairy is going to look very different 10 years from now, whereas in Indonesia, that dairy will look exactly the same as it was when it was copied. They're not going to be able to figure out how to move forward because there's not an organic process of innovation and development that they have there. The biggest strength for the United States has always been the ingenuity of its people, and that's something that the U.S. farmer, I think, really has to double down on because you no longer have the benefit of being the low-cost producer and living in the country that is omnipotent and that all countries must follow as soon as the president says that you have to.
One of the things I find interesting when you travel is that, you know, we have this idea that our U.S. dairy farmers are the best in the world, and they have been for many years. But when you travel other places, and now I meet these managers that are top-tier managers, and you go, well, how can they be competitive in this little world? Because their labor is about 10% of what you have in the U.S. So if you think you're so good in the U.S., don't forget your competitor across the world, he's only paying 10 cents on the dollar for his labor. And labor is one of our most expensive things on our dairies. And so there can be a situation where they can actually produce a product cheaper than we can in the U.S., and that's why our shoes and all our clothing is made in some of these countries, because labor is so cheap. That doesn't mean they have an advantage in other areas, but there is this little bit of, we need to be real about, are we the best? Are you sure about that? Are we really the lowest cost producer in the world? I'm not sure we are. And we need to not be too proud. We need to continue to innovate and continue to always analyze everything we do.
Yeah, and you brought up an issue, which is another one of these fork-in-the-road issues, and I don't know which direction the Trump administration is really going to go. But you're right, labor is a huge problem, and labor costs have been going up considerably in the United States. And it's ironic because there's more migration into this country and more interest in migrating to this country than arguably there's been in 50, 70 years. I mean, you have to go back and pull the data, but we're getting record amounts of people who are trying to get into this country at the southern border and in other places. And we have no regime for how to sort people, how to give people a legal path, make sure that the people who come in actually have skills that this country wants and that they can be successful with. If the Trump administration follows through with some of its threats about deportation of illegal migrants and shutting down migration flows into the country, labor's going to go up even more. Yep. And inflation, like you thought inflation was bad during the Biden administration, it's going to look a lot different and it's going to hit the labor market considerably. The flip side is, has he done enough? Has Trump said enough so that he has the credibility to say, look, we really need reform here. We've been talking about reform since the 1980s. We need to figure this system out. I've got the House and I've got the Senate. You are going to give me immigration reform. And we're going to make sure that we have a better path. And could he do that kind of influence and help change the situation? Because one of the things the United States has that most of these countries don't have, it could have cheap labor if it wanted. There's tons of cheap labor that would be more than willing to come into the United States if there was a path to do so. And I'll show you my own investment bias there, which is with some of my higher worth families that I'm working with. Some of the opportunities that we're most excited about are robotics and automation in the ag space, because the trend line is pretty clear to me. I'm not expecting labor markets to get any better, and I'm not betting on immigration reform. If it hasn't happened in the last 40 years, why should it happen in the next 2? Those dairies or those farmers who can use automation or use AI or use these sorts of things in order so that they're not as dependent on a labor market that's going to get a lot tighter and a lot messier in the next 2 years, I think they're going to be very successful.
Across the country, even if minimum wage is somewhere around $8 and maybe more other places, I haven't been to a dairy in 10 years that pays anywhere near that for their manual labor, their base labor. It's always 12, 14, 15, 17. And even then, it's difficult finding that labor. So I agree, the automation, it's just a question of how much automation. There'll be partial automation. But the labor is a huge question, and migration policy is going to come into play in the next couple of years.
Well, the other part of automation, and this is where everything is connected, because we're mostly talking about agriculture, but I'm going to spend a little time talking about semiconductors during my presentation today, because you can't have automation without chips, without computer chips, and computer chips are the front line of the U.S.-China competition. The entire semiconductor supply chain is being completely torn apart. So it's nice if you sit here and say, oh, great, we're going to have all this automation. But if John Deere can't manufacture the chips that go in the tractors that are going to make, the difference, or if it's an automatic dairy milker or something like that, if you can't get the computer chip that is in there that's actually going to do the thing that you need it to do, then that part of the tech trade war starts to impinge on the U.S. farmer. And I don't think the U.S. farmer is following, U.S. semiconductor restrictions and how that's being affected with China and global technology trade, maybe in as granular a way, which goes back to, are you working with companies that can source things domestically? Do they have capabilities to build things domestically? Are they dependent on foreign sources for inputs and things like that? That's true throughout the agricultural equipment complex and looking at that area in general. So I know I said I'm optimistic. I don't want to scare you. I feel like I've been throwing risks.
Oh, no, that's
threats
fine. That's fine.
Right now, so.
One of the things that when I'm on dairies all the time, we're always trying to look at 10 years. We're always trying to think, where is the future going? I mean, should we be thinking, hey, we're going to just be exporting cheese? Is it yogurt or is it powder? I mean, how do we look at the global market and try to, how does that affect our dairy in terms of planning the next 10 years?
This is where we're starting to venture out of the realm of geopolitics and into the realm of where the people listening to this podcast probably know more about this than I do. So take it with a grain of salt. This is just the medieval Islamic scholar coming in and telling you, this is what you should do with your dairy in 10 years. No, I already alluded to this a little bit, but I'll make it more plain, and it is the final thought of my presentation too, which is your best export market is the United States. Food insecurity in this country averages at about 10.4%. We're the most agriculturally rich country in the world, and more than 10% of our country doesn't have access to the calories that they need in order to be healthy. And when you look also at sort of U.S. consumption, milk consumption has been going down steadily since the 1970s, but per capita dairy consumption is up.
Correct.
And it's up because we've doubled cheese consumption over the same time period, and because people are desperate to get their hands on yogurt too. Walk into a supermarket in France and look at the yogurt aisle versus a supermarket here in the United States in the yogurt aisle. They're lapping us. The quality is better. They've got all sorts of variety. I could go on and on about this. So I think the answer here is you need to think very seriously about what ways can I be more competitive in the United States, and what specialty products can I sell to the market in the United States. One of the things we learned during inflation in the United States is the U.S. consumer, he will whine and complain about spending more, but he can afford it.
Yes.
if prices go up a little bit,
Yes.
and if you have a product that is really good, that gives them something that they want. And if we're talking about millennials and Gen Z, one of the things they seem to want is health-conscious products. So, if we're talking about probiotics and yogurt, like, you can do lots of interesting things that'll make those millennials and Gen Z want to shell out for your product. There's also, from a political standpoint, lobbying your represented officials to say, we need infrastructure here. You just gave the tech companies the CHIPS Act and billions of dollars worth of incentives to build. Can I have incentives to build better rail networks to my local domestic markets, or to
Upgrade
build
our processors.
all that
Yeah,
kind of
yeah.
stuff? If we can do it for the chip companies, why can't we do it for the U.S. farmer? So that's something I would be pounding on sort of local representatives on from that point of view. Then, stepping back, I'm not saying exports go away. Exports are obviously going to
no.
be critical, but I would make that domestic component a much bigger part of the front of your mind. And then when we're thinking about export markets, like I said, look at a map and decide the countries that you think you have a real advantage in and forge some real relationships with. And then I would double down on those countries. So whether that's in Indonesia because you've already been doing work there, whether you think it's because Japan, even if the demographics are not good, is going to have demand for your particular type of product. Maybe you have connections in Latin America because of family or because of some of the laborers
Right.
that are on your dairy. Be very, very intentional about the markets that you're picking, and pick markets that can withstand all of the volatile trade policy that's probably going to be coming as a result of the tariff wars and U.S.-China competition and all these big geopolitical forces I've been talking about.
Exciting times. Thank you.
You just heard from Jacob Shapiro and GPS team member Paul Dyke right here on the GPS DairyCast. I'm your host, Peggy Coffeen from the Up Level Dairy Podcast, and thanks for listening with us today.
The GPS DairyCast features conversations that deliver on the GPS Dairy Consulting promise to inspire change and grow leaders. If this GPS DairyCast has you looking for more ways to become an elite dairy producer, find more information in our show notes on how you can add a GPS advisor to your team.